Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Keith Smith, co-founder and CEO of Payability, the largest independent e-commerce and funding payments platform in the U.S., providing more than $4 billion in funding to e-commerce sellers. It's great to have you with us, Keith. Welcome to Trade Talks.
Hi, Jill. Thanks for having me.
The pandemic was devastating in many respects, but it gave a huge boost to e-commerce. Now, with declining vaccination rates and warmer weather, what does the e-commerce space look like now?
So it is definitely still growing. There's no doubt about that. With that said, I think we have seen in Q2 that it was probably a bit softer than what we had expected, and I think what the larger industry had expected. So we were expecting, despite a 44% growth from 2019 to 2020, for all the reasons we're quite familiar with, there was an expectation that e-commerce generally was going to grow about 13% this year in 2021. It looks like it is probably growing at about half that speed at this point in time. So the pull forward of the kind of this cannibalization effect that's been going on for years from brick and mortar retail towards e-commerce in 2020 probably pulled forward more of the growth than the industry expected in 2021. With that said, we're still seeing strength, and Q3 is starting to show some significant strength and some of that resurgence back, and expecting that we'll probably be closer to a double-digit kind of growth in e-commerce generally within the next few months.
So can you tell us more about Payability? Do you also provide capital to e-commerce sellers?
Exactly. Yes, we provide both payment solutions as well as financing solutions for these e-commerce sellers, and there are millions of small independent e-commerce sellers that are selling on various platforms and through marketplaces, and we provide them with those financing and payment solutions.
What's your typical e-seller look like?
So there's not really a typical one. There's a wide range. If you look at the average of our customers, the average customer is doing $50,000 to $60,000 a month in sales. They're a 3 to 5 person company, and they are relatively small. They've probably been in business for 18 to 24 months kind of time frame. With that said, we have a wide range. We work with customers that are as small as doing $2,000 a month in sales, all the way up to those that are doing $2 to $3 million a month in sales. So there's a very wide range.
Let's talk about the evolution of e-commerce sellers over time. How would you describe today's seller, and what impact has Amazon had?
Amazon has had a tremendous impact on the entire ecosystem for e-commerce, especially here in the U.S. They are obviously the juggernaut. They have historically had over 50% market share of e-commerce in the United States. Interestingly, that's dipped a bit in 2020. So as there was massive growth, Amazon also grew very significantly through 2020, but they ended the year with less market share than they entered, and we think that's probably generally a pretty good thing for the overall e-commerce industry. There are other platforms, other alternatives, other places where these e-commerce sellers can sell their wares. Shopify being a platform that's a great example that we've obviously all heard a lot about and seen their growth, and they're having a big impact as well. I would say that the change, though, for these e-commerce sellers that we've witnessed over the course of the last 6 years that we've been in business and we've been serving these customers is that there's been a significant increase in sophistication amongst these sellers. So a lot of them were kind of part-time, not necessarily professional types of sellers, and there are now 4.5 million professional sellers in the United States. They also have access to a lot more tools. So there is an ecosystem that has been built up now. Investors are investing in companies that are providing tools. So part of that is the financing and payment story, but there's a lot of other tools around fulfillment, around the supply chain, et cetera, where there are companies that are providing really innovative solutions, and they are now finding traction. They are now finding capital sources, and investors are investing. So it is a much more vibrant ecosystem and a much friendlier place to be able to start an e-commerce business at this point.
How do you think things will shape up as we think about holiday 2021 already, if you can imagine? What factors are you watching?
So we pay a lot of attention, and frankly, kind of the summer is the time to be thinking about providing capital to our customers so that they can use that capital to be able to make sure that they place their orders for their inventory, to ensure that they have the inventory needed to be able to meet the holiday demand. And we certainly do see a significant holiday spike. That is kind of what we refer to as our Super Bowl, and it starts kicking off in September. We start to see increases, and then of course in November and early December is when things really start to pick up. And so we're seeing the same trends that we've seen in prior years, that there is a significant increase in activity, significant increase in capital needs in order to be able to provide for not only the inventory needs, but also if a customer of ours needs to be able to drive demand to their own website, et cetera, they also need capital for advertising and marketing campaigns. So that's the sort of thing that starts over the course of the next couple of months. The past couple of months have really been about providing that capital for inventory needs for the Q4 increase.
Keith, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Market Reporter at Nasdaq.
Thanks for having me.